Hi, ಎಲ್ಲರಿಗೂ ನಮಸ್ಕಾರ. Today I am explaining about investment avenues and types of investment avenues. So let us know what is investment avenues means. So investment avenues means investing money in something, where in same it refers to an investment alternatives or investment strategies. So investment avenues means investing our money in something. So as you all know that there are different categories that we can invest our money. So we need to choose a certain platform to invest our money, and we assume that we can get a high rate of returns or earnings. So we can also say it as a investment alternatives. So there will be a different strategies in investing our money so that we can get a high rate of returns or earnings, or we can also say it as a to achieve our financial goals. Surprisingly, no investment strategies can guarantee high rate of returns with no risk. So investment says that there is no guarantee that you can get a high rate of returns when there is a low risk platform. So a person goes and invests in a low risk platform and he assumes that he will get a high rate of returns. But there is no guarantee that he will get a high rate of returns. So if there is a high risk platform, then he will get a high returns. If there is a low risk platform, he will get a low returns, or we can also say it as a fixed rate of interest. So your investment says that if there is a greater risk, there will be a larger returns. So the final statement says that danger and the reward are proportionate in the real world. So your risk and the earnings are equal in the investment concept. So finally, the investment avenues means there will be a different ways to invest our money so that we can get a high rate of returns or earnings, or we can also say it as to achieve our financial goals. So now moving to the next types of avenues of investment. So the first one is fixed deposit. So as you all know that we need to deposit a fixed amount of money in the bank for a specific period and earn a fixed rate of interest. So as you all know, we need to drop our money in our bank for a fixed period of time. We will get a fixed rate of interest. So this is a platform of low risk as well as a low returns. So moving to the next. Second point is a mutual funds. So this is a second type of investment avenues. So mutual funds. So mutual fund means invest in a pool of funds that are managed by the professional fund managers. The fund managers invest in various securities based on the objective and the risk profile of the fund. So mutual funds means we need to invest in a pool of funds that all the customers are investing in the mutual funds. So this all the funds are managed by the professional fund managers. So who is professional fund manager? So a professional fund manager is a person, or he is the responsible for the implementing the funds. So he know about the investment strategies or trading activities. So they are highly qualified. So they are highly educated. So they are highly experienced in such activities like investment strategies or trading activities. So they are the professional fund managers. So they will invest in the various securities based on the objectives and the risk profile of the fund. So various securities in sense purchasing in order to say it as an investment like bonds, stocks, golds, etc. So the fund manager will invest in such activities according to the risk profile of the fund. So this is the platform of a medium to high risk as well as a medium to high returns. It depends upon the type of the fund. So now for example a person goes and invests in a mutual funds. So he will get a stable amount or a stable returns at a low risk platform. So then that investment will be a fixed income securities on that investment. Fixed income securities means maybe government or corporate bonds like treasury bills, commercial papers, certificate of deposits. So there will be a guarantee for our investment, and we can also say it as a risk-free investment. So it all depends upon the type of the funds. So now moving to the next. So these are the general information that you need to know. This is about mutual fund. These are the types of mutual funds. So just a glance about this. First one is equity funds. So we need to invest in the stocks of companies. So they aim to generate a high returns by capital appreciation, but they also carry high risk due to the market fluctuation. So here they get a high returns by capital appreciation. Capital appreciation means the difference between the purchasing price and the selling price, which is treated as a profit. So it is a capital appreciation. So it is also a high risk platform. So where it is depend upon the market fluctuations. So next, depth funds. So depth fund means these funds invest mainly in fixed income securities. So fixed income securities means it is a low risk platform. So fixed income securities means already I said that it's a corporate or government bonds like treasury bills, commercial papers, deposit of certificates. So like that. So next one, hybrid funds. They aim to balance the growth potential of equity with the stability of depth, but they also carry a high risk. Hybrid funds can further classified based on the asset allocation investment styles. So a hybrid fund means so it is included with equity funds as well as depth funds. So there are balancing the growth of potential activities of the investment concept. So they are also high risk, and it is the hybrid funds are classified in the assets allocation as well as the investment styles. So now next one, money market funds. These funds invest in short term debt securities. So these are the short term purposes, but they aim also low returns. So it is a low risk platform as well as it also get a low returns. So these are suitable for the investors who need to park their money for a short period or want to maintain an emergency funds. So if in case emergency purpose they can withdraw their money, and also it is a secure which is useful for the short term purposes. And the index funds, next one, these funds invest in securities that replicate the performance of specific index such as Nifty 50 or the Sensex. So they balance about the or they provide that similar index. So they provide a similar they provide a returns according to the similar index, but they also have a low cost at high risk. So this is also on the platform that it has a low high risk but according to the low returns. So it is a high risk platform as well as it provides a low returns according to the fluctuations. So it is suitable for the person or an investor who want to invest in the broad market or a particular segment without a active management. So for that categories or that persons, this platform is very suitable for that them. So next one is thematic funds. So these funds invest in securities that are related to a specific theme, such as technology, healthcare, or infrastructure. So these funds are implemented for the technologies, healthcare, and infrastructure, so that they can get a returns by investing in these types of funds. So now moving to the next slide. So this is the third type of investment avenues, public provident fund. So yeah, it is a 15-year lock-in saving scheme. We can invest in a long-term saving scheme given by the government of India. We can deposit up to 1.5 lakh per year and earn a fixed rate of interest. So this is a low risk platform as well as a fixed rate of interest. So we need to deposit our deposit money 1.5 lakh per year, and we will get a high rate of returns, or it fluctuates, or we can also get a fixed rate of returns. So this is a 15 years scheme for a long term purposes. So this is the platform that a low risk as well as a moderate returns for a 15 years. Moderate returns in sense it 15 years of period of time, it will be a low returns, when it will be a medium returns, or it will be a high returns, widely regarded as secure. So this is a secure platform. The government adjusts a public provident fund interest rate quarterly. So quarterly in sense in a year they will provide a 4 times interest. So investor who met certain conditions may also be eligible for partial withdrawal or loan. So these are the platforms that are useful for the people who can withdraw their money when they need at emergency period, or also they can take a loan. So these are all very useful. So here public provident fund means it is a 15-year lock scheme. It is provided by the government of India, and we need to deposit 1.5 lakh per year, and we will get a fixed rate of interest. And it is a platform that it is a low risk as well as a moderate returns. It fluctuates maybe a period of time. We will get a high returns, we will get a medium returns, we will get a fixed rate of returns according to the period of time, and the government will provide our interest quarterly. It means in yearly they 4 times they will provide our interest. And this is very useful for a person that in emergency case they can withdraw their money or they can also take a loan. So moving to the next, fourth one, equity stocks. We need to buy a shares of company and become a part owner of the business. We can earn returns through dividend and capital appreciation. So equity stocks means we need to buy a shares from a company and we will become a part owner of the business, and they will provide a returns through dividend or a capital appreciation. So a dividend means some sort of amount is given to the shareholders by the company from the profit. So it is treated as a dividend. So capital appreciation means the purchasing difference between the purchasing price and the selling price, which is treated as a profit. So by this the shareholders can earn or returns. So this is a platform like high risk as well as a high returns. So it depends upon the market fluctuation or a performance of the company. So this is the equity stocks. So here equity stocks are very beneficial as well as it is popular for gaining a profit. But it is not suitable for everyone because we need ideas. We need a experience to invest our money in a selection of stocks or purchase of shares in the company. We need a idea or we need a knowledge. So the best way is to invest our money in is a demat account. So here demat account is very useful or the best way to invest our money. So we can also get an ideas about the stock shares, or we can get a knowledge about a company that how we need to invest our money in stocks. So this will be a very useful for us. So moving to the next, derivative markets. So derivatives are the financial contract. Those values are dependent on the group of assets, maybe securities, bonds, certificates, or currencies, or a commodity brokers. So the value will be changing according to the market condition. And the main reason is to earn profit in future and manage your risk. So derivative market means, so this is the purpose, the reason to earn profit in future and manage our risk. So this is the main reason. So for example, now a farmer grows a wheat. So he grows a wheat for 10 quintals. For example, we can take it as a 10 quintals. He will grow a wheat of 10 quintals, and he decided that he assumes that he want to sell that 10 quintals at 2000 rupees. And also he is afraid of a climatic condition, insufficient of water or water supply, or maybe some diseases in some cases. So what he will do, he will go to the market and he will make a contract. He will go to the commodity brokers and he will make a contract that I will sell you after the 4 months, I will sell you a 10 quintals of wheat and you need to provide a 2000 rupees for me. So they will make a contract. The days goes on, in the marketplace the price will decrease or the price will fall due to the large supply in the market. So now the price is 1900 rupees. For example, we can take it as 1900 rupees because of a high supply in the market. So now, but also the commodity broker should provide a farmer 2000 rupees only. In case a days goes on and the price will increase due to the lesser supply in the market. Now its price is 2100 rupees, but also 2000 rupees should be provided to the farmer. So this is what the reason to earn a profit in the future as well as to manage our risk. So this is the contract basis financial activities. So it is a financial instruments like which includes forward contracts or a future contracts, options, swaps, and other derivatives. So this is what a derivative market means, to manage a risk as well as to earn a profit for a future. So now moving to the next, sixth one, employee provident fund. So it is a retirement savings scheme that is available only to salaried employees. Monthly contribution are deducted from employees paycheck, and the employers contribute the organization capital. So here employee provident fund is also one type of investment avenues which it is provided for the salaried employees. So after the retirement, so a person who is working in the company, he is bearing a monthly salary, and in monthly salary some sort of amount is deducted by the company, which is treated as a organization capital. So after his retirement, they will provide his employee provident fund. So until that time, the amount will be in organization only, and they can also use that money in a crisis or in certain uncertain situations, and companies falling down. That time they can use that money, and then when the retirement of that employee, they will provide that amount for that person. So next, national pension scheme. National pension system in an India, government run retirement pension plan. We can build a capital that they will provide a steady income stream after we lose our job. After retirement, investors may make partial withdrawal from the fund. National pension system means it is a pension that you already know that it is provided for the person who after the retirement. So until that working period, the person is working in the company or a government official job. So until that, some sort of amount is deducted by the government only, and they will keep it as their capital. After the retirement of a person, they will provide a monthly fixed income for a retirement person. They can withdraw their money according to the monthly basis. So this is the very useful national pension scheme. So already, as you know, it is provided for the retirement persons. So the people who are working in the government officials job. So now moving to the next, property and real estate. So this is also one type of investment avenues, that investing in the real estate is one of the most popular financial strategies. We buy a property such as a land, house or a commercial space and earn income through rent or sell. So here, property or well as real estate. So we need to invest in these activities so that we can get a returns by or we can returns by rent, providing a rent, or we can sell a property. By that also we can get a returns. So this is the high risk as well as a high returns platform. So the property price can vary depending upon the location, demand, supply, and other factors. So if a location that has a site and it is very popular, then it will get a high returns, as well as it is also high risk. All depends upon the location as well as the demand for that site. So we can have a revenue or we can have a earnings by a capital appreciation as well as a rental income. So capital appreciation sense, purchasing price and the selling price, which is difference, makes a profit. And rental income in sense, we need to provide a rent purpose for 2 years, 3 years according to the contract. Then by that also we can gain a profit. So now moving to the next, invest in golds. Gold jewelry is most traditional from the investment of for Indians. While investing gold coins or biscuits is a variable alternative, investing in gold may be a better. So when the cost of gold is low, we can buy, and when the cost of gold is high, we can sell. So this is a jewelry is a liquid asset for us. So this is also one type of investment avenues, and we can also invest in gold jewelries so that we can when we are needed of money, or we can sell it or when we have a high price in the gold, so we can sell it to earn a returns. At a low price we can buy it, so by this also we can earn some returns. So next, so this is a life insurance as well as general insurance. So here, this is also one type of investment avenues. Life insurance policies protects against risk in the case of an accident. They are not considered as investment. Point. So here, it is not a investment, but also for our Indian person, we as an Indian, we treat it as an investment. The life insurance is also one type of investment, because in emergency purposes we can use this type of platform. So here, on the other hand, many Indians view insurance as an investment. Life insurance means a safeguarding one's future. Other investment options seek profit. However, life insurance is designed to safeguard our family in the event of an unexpected calamity. Life insurance is also one type of investment, so that it is used at a time of uncertain situations. So when time accidents or any incidents, injuries, to it safeguards our life in the emergency period or emergency cases. So thank you. So I hope you all got my point. So thank you for everyone for listening. Thank you.